Hey guys, Darren here. Thanks for joining the Stock Option Market Weekly update for the week of July 29th, 2024. We're going to touch on where we are in the S&P 500 year to date, what it looks like moving forward the rest of this year. We're going to talk about interest rates and the cuts that are coming, as well as the economic news that came out last week and is coming out this week. We're going to touch on the different sectors and how they've been performing and what they look like going forward, which ones are good buys, which ones we should probably stay away from. And then we're going to jump into the trades on the live option trading platform. Before we get started, please go ahead and hit that like and subscribe button down below. It really helps to get the video out to more people, and I really appreciate it, so thank you very much. Also, be sure and download the free options workshop in the link below. It talks about the two main benefits of trading options over buying stocks. There's also a paid course if you want to dig into the options a little bit deeper and get the most bang for your buck. Use the link below and open an account with Mumu. You can get 8.1% on uninvested cash and up to 15 free stocks. 5 for a deposit of $100 and 10 more for just $1,000. You really need to put in at least $1,000 anyway to make a few different trades. You also get the free charting software that's great, and I use it every day. It's a zero commission online platform and brokerage. Disclaimer, I'm not a financial planner and I'm not recommending trades. Please do your own research, and if you're new or learning options, I recommend you start small. All right, guys, let's take a look and see where we are in the S&P 500. This is this is the year-to-date chart, and you can see we started the year at 47.43, and we're up around 14.5% year-to-date, so we're up pretty big. If we go to the 5-day and last week, you can see we actually had a slight down day last week. So moving forward, I think that this is a small correction. Things look pretty good. If we look at what's coming out this week, we've got some economic news. We've got unemployment reports coming out later on Friday. That's the big one. We've got an expectation of 190,000 jobs for the U.S. unemployment report, and previously the year before 206,000. So that's going to be the key factor going forward. An initial jobless claims of 233,000 expected on Thursday. If we look at the different sectors last week, you can see consumer discretionary and tech were down big, over 2% for both. And those are big corrections because year to date, you can see actually consumer discretionary was down, but communication services. So basically it has been way up. But tech's coming back in line, 12% up year to date. So they're talking about the rotation from tech, the Magnificent Seven, the Amazon, Tesla, Facebook, Alphabet, Google, into more of the Russell small caps with the interest rates expected to come down. Interest rates, we've got this week actually, there's very little chance that there's going to be a rate cut. We're at 5.25 to 5.5 right now. There's a 95% chance that it's going to stay that way. September though, 89%, almost 90% chance of the first rate cut. And then November, this is for the first time, it's up over 50%, 60% of a second rate cut in November, down to 4.75 and to 5. And then December, another rate cut possibly. So they're still pricing in, and this is, some of the odds, and this is the CME group that comes out with this report, but they're saying 3 rate cuts. I don't know that that's going to happen, but that's going to be good for the small caps. Okay, and looking at the FactSet Earnings Insight report for last Friday, July 26th, we can see that for Q2, the year-over-year earnings growth rate for the S&P is 9.8%. So that's very good. And if we go to page 15 here, we can look, looks like page 16. We can look at Q3. They're projecting 6.8% earnings growth and 5% revenue growth, so very good. And then you can see Q4, huge earnings growth, 16.7. I don't know where they come up with that, but the numbers are looking really good. If we look all the way out to calendar year 2025, they're projecting earnings growth of 14.8% and 6%. So very good looking forward. And one thing that I like to look at as well is the PE ratios of some of the different sectors. And if we look here, you can see technology is still very overvalued. The forward PE up here, 28, and you can see a lot of these sectors. The S&P 500 still overvalued right now. Healthcare overvalued. Energy is undervalued right now. 12.5% forward PE. The 10-year average is 15. So I like energy, real estate, utilities. Actually just bought some Lennar, but those are good values right now. All right, guys, let's jump into the live trades. This is the Tastytrade option trading platform. There's a link down below. I use this and Mumu. For the first trade, we've got Airbnb. I'm got a 145, 135 put credit spread on. It's up 1.66 right now. It's 7:46, so we've been open in about an hour and 15 minutes. I'm on the West Coast. But if you look at the put credit spread, I'm profitable. What's nice is it can even move down and I'm still profitable. It's profitable down to 140, but I've got a short strike at 145. So even though I'm below my short strike and it's moved against me, I love this stock going forward. You can see the forecast is 152, so it's got some room to move up. And the year to date, it's been down, but I love Airbnb going forward. It's somewhat of a real estate play as well, and they've been growing their active listings. They've got huge free cash flow, over $4 billion. They earn an incredible margin on that. My actual target's about 170 for Airbnb, so I'm long Airbnb, and it's just in the last 30 days, we made $171 in Airbnb. So I like it going forward, staying long. AMD, they've got earnings coming out this week, tomorrow, and it is after the bell. You can see right here, and I've got a 155, 135, and I'm out 53 days in September. So I need it to move up, but I have done pretty well in AMD. I think they're going to do well going forward. I've got a $200 target, and everybody's got it, a buy rating. All the analysts, they've got close to 190, 187, but it's still way below that right now. We're profitable down to 144 and a half, and so we're not too far. It's up $2 today. If it does that tomorrow, I'm in the profit zone, but it's done really well moving forward, but it's had a recent move down. But love AMD. Amazon, one of the Magnificent Seven, they got hurt, dropped. I'm long. I like Amazon, but you might want to wait if you're not in it right now with the move out of tech. But I think long term, it really depends on earnings this week, and they've got earnings coming out on the 1st. So we'll see how that is. The other, Google and Tesla, Alphabet, didn't do real well last week. So we'll see if it continues. The market could take off if earnings for some of these big techs, AMD and Amazon, come out and they beat, but they're already at high valuations, as we saw from that FactSet earnings insight report. So I'm not adding to my positions right now, but it has had a drop, so I'm staying long, continuing to roll my options month after month. And you can see the profit range. Again, I've got put credit spreads on. Options allow you to control 100 shares. One option contract, I've got 2 on, 2 put credit spreads, but it allows you to control 100 shares of stock. That would cost $183 times 100 shares is $18,300. This doesn't require that at all. My capital expenditure cap requirement is $2,000 on these. So options really allow you to play the stock market with and really be capital efficient. AVGO, which is Broadcom. Long, they're at 151 right now, and they've got earnings coming out the end of next month. But same sort of deal. I'm long a put spread. I like Broadcom. A lot of people are saying right now Broadcom's a better buy than Nvidia, but I'm long Broadcom because it is down, and I've got a much higher target of 180. It's at 151. Let me know if you're trading any of these stocks and what your thoughts are in the comments below. Really appreciate it. DraftKings, I've been doing poor man's covered calls. I've made some videos on this, but you can see it's moved down. But even though it's moved down, then I make money on both sides. I make it on my short call right here that I sell month after month in DraftKings, and we've done really well in DraftKings just by doing this. You can see just over the last 30 days we've made $280, but you know, over the last year we've made $3,205. So poor man's covered calls, it's basically a leaps option, so I'm out over 1 year, which is a long-term deep in the money call, the 30, and then I sell the 41 call against it and make money on both sides. So I do that in lower price stocks like this, and you can control that 100 shares for less than half the cost of buying them outright. So that's the advantage of a poor man's covered call. Gold, it's had a high IVR and been trading within a range. I like it in this range. As long as we stay in this range and we're right in the middle of our profit range, and we've got an iron condor on. So what that is a call credit spread and a put credit spread. As long as it stays in between this 215 and 227.5, then we collect all this premium. And you can see there's $286 in premium left to collect in this trade, but I like it when IVR is high. It allows you to collect more premium by selling options, but it's right in that trading range. You can see it's been staying in a range. It's right in the middle of it right now, so that's why I like iron condors and gold right now. Google, Alphabet, they came out with earnings. Like I said, they dropped. They're up $2 today, so they're going to come back. My target for Google is much higher. These guys have it all buys 190 target, so they even have it higher, 170, up a huge amount. But my target's even higher than that for Google. I think they're going to do great. And keep in mind, there's a lot of money on the sidelines right now. So as soon as these interest rate cuts come, I expect more money to come in, out of those T-bills and different safe investments, bonds, and move into the stock market to keep pace with the inflation. But we've got put credit spreads on, and we are profitable just like the others. It can even move down, but actually we're down below it. We're not in the profit zone right now, but it's done well for us consistently. Down due to last week, but Google's done really well for us over the last year, and you can see that big drop, but I expect it to move back up. IWM, just bought this morning. I should have waited, but down $27, but it's done well for us. But this is the Russell, and part of that, I just wanted to have some small caps because I do have a lot of tech, so I put on a easy put credit spread in the Russell, 220, 215, and you can see here, we'll just put today, you can see down 26, but I collected $1.60, so that's $160. So and I'm $5 wide, so my max loss was $5, which is $500, and I collected $160. As long as we stay above, we're still in the profit zone, so we can even move down and make money. So that's the beauty of trading options. Lennar, just bought this morning as well. They've, it's the home builder, 176. They are kind of at highs. I don't like doing it when they are at highs, but again, a put credit spread. I wanted to have some home builder on right now. They're at 176, 36 IVR. And then Netflix. Iron Condor is in Netflix, and it's been trading within a range. What has happened to my chart? Let's go 1 year, 1 day. Yeah, this chart is not doing well right now. Hey, you know what? I'll show you the chart on Mumu. Here's the chart on Mumu. This is the S&P 500, but you can look last 6 months. You can change it 5 days, and I've got some different indicators but collected. But I really love this chart. You can look at the last 20 days, look at the last 5 days, and you can see each day how it's moved. And you can see we've moved down in the last 5 days, but 20 days, and then scroll in and out, and you can set up whatever indicators that you like. But I really like Mumu as well. So go ahead and use that link and join Mumu. It's good to have a couple of different brokerages that you use at least, uh, just in case something happens with one of them, you've got another one. And there's insurance, on these different brokerages that they all have as well. So I don't like to have all my money in one brokerage. But Netflix, we're profitable as long as it stays in this range. So above about 600, which it has been, and 700, we're going to continue to collect profits, and we've done really well in Netflix over the last year. I expect them to, oh, there we go. Now we're back in that range. So it has dropped, you can see just recently, but I'm not concerned. Iron condors have been working beautifully. I've got one on in August and September. They're both going to profitable right now. ServiceNow came out with earnings. It moved way up, and we did really well on ServiceNow as well. Just in the last 30 days. Yeah, $361. And this had a big move down, and that's why I went ahead and went long and closed out my call side. So I made money on the call side, and then when it went down, I closed out the calls, and then it moved up right after earnings. But I know long term, my target for ServiceNow is much higher. There's no financials on this side available for that, but my target for ServiceNow is like 860. So we've still got a little bit of a ways to go. Nvidia, the big AI stock that everybody is talking about, it had real high IVC. It's at 90. So that's why when I want to do iron condors, if I think it's in the range that it's supposed to be in and not expected to move up or down a huge amount, we stay profitable. I've got two different iron condors on, one in August, one in September. We've got $556 to collect as long as it stays within this range over the next 18 days for the August and the next 53 days for September. And you can see earnings is on 8/28. So this iron condor expires prior to the earnings, which I like. But we're at the lower end of that range right now down here. But I'm not too concerned. I don't think the best AI stock is going to drop and go below that. And it just had a huge split, so it's already at low. So I would be long Nvidia right now. But again, you want to be careful about the tech stock rotation and where that's going with interest rates. Palantir, they've got earnings coming up on August 5th. This is another poor man's covered call. And we've done well in Palantir, 2763 IVR. I love Palantir long term. My target for Palantir is about $30 and making money on both sides. But we've made in the last year, over $1,000. So not too shabby. Super Micro, these guys, wow, down $14 today. IVR is 36. I've got 710, so we're outside the profit zone right now, but just below it. We just need a small move up, so any uptick in the market, but I'm not worried about these guys long term. Everybody's got them a buy. They've got $1,000 target, so this is a screaming buy, according to a lot of these analysts. And it's had that big move down, so look at this. That's like a perfect triangle, which indicates that it is poised for a move up. So I like Super Micro. That's why I'm long. And this is, I think, a screaming buy. I may put another one on. I'm going to hold off on adding the tech this, until some of these earnings numbers come out this week. SOFI, they've got earnings this week, 7:30. I'm excited to see this one. It's been down. Their CEO, Anthony Noto, has been on TV talking. I think he's a great CEO. I think that SoFi is going to do well. They're really an interest rate play, so as long as we get those cuts coming, um, then I think SoFi is going to do great. Their lending and defaults, as long as they don't have any issues with that, which some of the other small banks are reporting now, then that's the only thing that I can see bringing them down. But they're already at lows, in the $7 range. I think this can go up huge. A lot of these analysts have that as a target and small. Yeah, I like SoFi long term. So it's just a matter of time when this one takes off. And I've got these leaps. I'm not even selling calls against them because you can't collect that much on the calls because it's too low of a price right now. But I've got 11 different leaps options on in SoFi. TLT and TMF are the bond funds. They're up today. They'll do well as interest rates get cut. And Tesla had that big drop. They're at 231 right now, so they've kind of made a little bit of a comeback. We're profitable above 215, and we're at 231 right now, so we're in good shape. ULTA, and again, my target for Tesla is much, much higher. It's I think it's like 350. Let me see what I've got down here. For Tesla, yeah, 360. So, but anyway, a lot higher than it is now. ULTA, I've got a put spread 385, 375. We're at 365 right now. They had a huge move down. This chart is not working today. I'm gonna have to. That's why I like these guys for the charting. But let's see. ULTA, we've got a 385, 375 put credit spread. We're down below the profit range, but it's had a big drop. 82 IVR. Man, I may need to look at buying some more of this. I'm going to look at the news and but I mean, financially, these guys, they've got a 478 target, these analysts, and we've got all analysts but one is a strong buy. Their financials are really good. You can see their revenue and net income and their balance sheet. Everything's really good. I'm going to go ahead and sell another put credit spread. So I'm going to go to the table. Oh, they've got earnings coming out. When's earnings? 829. Wow. Okay. Oh, well. Hey, I'm going to go ahead and buy one or sell. I'm going to sell a put credit spread. So let's go September 360, 355, collect $2. We can go $10 wide and collect $3.95. Wow. I might do that. I might go $3 wide and go $3.50, $3.40. So I can have a big drop, and I'm collecting a third. So there's a $10 width. We're collecting almost $3.33, which is $333 would be a third the width of the strike. Our profit, actually it's 35 delta. So we've got about a 65. This says 63% probability of profit. So but again, if the stock moved down even more than it already did, I would just roll to the next month. But we're going to collect $325. Our max loss is $675. So it's basically that $10 width minus what we collect. So this goes in our account up front, $3.25. And then we have, we're profitable above this range. So it's actually a great trade in my opinion. I'm going to go ahead and hit review and send. See if we didn't quite get filled with that yet. Let's do it again. Lower that a little. So this is not the most liquid, but hey, let's see if we can do it. There, we got filled. 321 activity. So $321 was just deposited in our account. ExxonMobil is the next one. 110, 120, we're right in the middle at 115. Iron Condor on curve analysis, you can see we're right in the middle there. ExxonMobil's done really well for us, and over the last 30 days, I'm not sure why it's not showing, but we've done well. We're right in the middle of the range. I like ExxonMobil going forward. Let's take a look at the earnings that we've got coming out. On Tastytrade, you can just go to earnings right here, all earnings, And then you can sort by the date, and you can see all the companies. So we've got McDonald's on the 29th. We've got who else do we have this week? We've got a lot. Wow. Procter & Gamble. Now, PayPal coming out on the 30th. Wow. Microsoft, big one. AMD. So we've got a lot of earnings coming out. We've got Boeing coming out, and this is just on the 30th. And then every day this week we've got quite a bit. We've got MasterCard coming out. So let me know what you're doing with earnings as well. All right, guys, I've put a link down below for the free options workshop. Be sure and grab that. Remember to hit like and subscribe. Join Mumu. Get your 15 free stocks. Leave a comment. Ask a question. I answer every one. What stocks are you trading right now? Thanks for watching. I'll see you in the next video.